Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now in this video we are going to be diving into one of the most important concepts in trading, and that is market structure based trading strategies. Alright, now if you've ever struggled with knowing when to enter, exit, or understand price movements, then this video is going to be very beneficial for you. Okay, market structure is the foundation of all price action, and once you master it, you will never look at the charts the same way again. All right, so stick around as we cover how to identify trends, key levels, breakouts, and the best strategies to trade market structure effectively. Now before we get started, smash that like button and subscribe if you want more expert trading content. Now let's just get into it. Market structure refers to how price moves in a logical and repeatable way. Alright, it is the framework that traders use to identify trends, reversals, and high probability trade setups. Alright, now price doesn't move randomly, it follows a structured path. Alright, in an uptrend, price makes higher highs and higher lows. Alright, that is the structure for an uptrend, higher highs and higher lows. Right, in a downtrend, price makes lower highs and lower lows. That is the structure for a downtrend. Alright, then in a consolidation phase, in a consolidation market, a ranging market is where you can either call it consolidation or ranging. Either ways, they mean the same thing. So a ranging market is where price moves sideways. All right, sideways. That's what we call a ranging market, or a sideways market, or a consolidation market. Now, by understanding market structure, you'll be able to predict price movements with greater confidence and avoid unnecessary losses. Okay, now how do you identify market trends? The first step in market structure based trading is learning how to identify the trend. All right, now for an uptrend, you should be looking for a series of higher highs and higher lows. All right, this signals that buyers are in control and price is likely to continue higher. Then in a downtrend, you should be looking for a series of lower highs and lower lows. This indicates that sellers are dominant and price is likely to drop further. Then in a sideways market, or a consolidation market, price moves within a defined range. All right, bouncing between support and resistance. Right, bouncing between support and resistance levels. Now that we know how to identify trends, the next step is marking key levels to find the best trading opportunities. All right, now for the first strategy, which is going to be trading with support and resistance, we're going to be looking at how to trade with support and resistance. Now, one of the most powerful market structure strategies is trading off support and resistance levels. Now, these are areas where price has historically reacted, creating high probability trade setups. A support is a price level where demand is strong enough to prevent the price from falling further, while a resistance is a price level where selling pressure is high, stopping price from rising further. Okay, so how do you trade it? You buy near a support in an uptrend. For example, if you can actually buy at support and sell at resistance during ranging markets, and you can also do that even in trending markets. For example, you have a trending market like this, right? Despite the fact that it's a trending market, there are still support and resistance zones where price gets rejected but break out and continue in the direction of the sell. For example, you can see here, this was a good zone. That's the reason why it was rejected here, and it flipped into a support and it got rejected, and then this was a resistance that flipped into a support and then got rejected here. and then you can see this was a resistance, it got rejected, and here it got rejected. So once you have identified support and resistance levels, if you are trading it in a trending market, you can just buy in a bullish trend and sell in a bearish trend. All right, but if it's a consolidation market, you can just buy around support, sell around resistance, and you are good to go, right? Then if you have a sell trend, right, you can see that we still have zones, right? We still have support and resistance zones in trend markets, right? You can sell whenever price gets to resistance, and you have a pattern that is showing a rejection. You can then sell at resistance. You can also look for breakouts where price moves aggressively, all right, beyond key levels, confirming a new trend direction. The next strategy is trading breakouts and retests. Now, breakouts happen when price escapes a range, trend line, or pattern, leading to a potential strong move. However, not all breakouts are valid, all right? Some are false breakouts designed to trap traders. So here's how to trade it. You have to wait for a confirmed breakout with strong volume, all right? Then you look for, I'm going to add the volumes indicator because it's going to come in really handy. Yeah, we can use the volumes indicator to be looking out for, increase in volumes whenever we have a breakout, okay? Yeah, so we can see that here we had a buy trend, right? We had a buy trend. I'm just going to extend this. We had a buy trend, and you can see that we had a breakout from this buy trend, that commenced this sell. And around the time that the breakout happened, can you see that there was a little increase in volume? All right. So you wait for a confirmed breakout with strong volume, and then you look for a retest of the broken level. Can you see this? You can see that after the breakout happened, you can see that there was a retest. This price went up close to the breakout point, and then it continued downwards. So the retest gives an extra confirmation. Then you can enter the trade on the retest with a stop loss above the level if it is a bearish breakout, or below the level if it's a bullish breakout. Okay. Now the third strategy is market structure shifts and reversals. Understanding market structure shifts is crucial for spotting reversals. Okay, when price transitions from an uptrend to a downtrend, or vice versa, we see a change in highs and lows, like what we can see happen here. You can see that there was a transition from an uptrend to a downtrend. Now, what are the signs of a market structure shift? You're going to notice a break in the trend pattern. All right, higher highs and higher lows. You can see what happened here. Higher highs and higher lows are going to turn into lower highs and lower lows. I'm going to notice price breaking a key support or a key resistance. All right, and you're going to notice increasing volume on the move, signaling strong momentum. Now, how do you trade it? You identify a clear break of structure from higher lows and higher highs turning into lower highs and lower lows. In fact, more importantly, look for higher lows turning into lower highs. Higher lows turning into lower highs. Then you wait for confirmation. This could be a retest of the broken trend line. Then you enter the trade in the new direction. All right, in this case, you enter a sell after your breakout has been confirmed. All right, setting your stop loss above or below the shift point, depending on the breakout direction. For a sell breakout, it's going to be above. For a bullish breakout, it's going to be below. Okay. Now, what are the pro tips for market structure trading? First of all, follow the trend. All right, the trend is your best friend. Trading against market structure leads to low probability trades. All right. Secondly, always use multiple time frames. Okay, higher time frames provide better clarity on market structure, and always combine with indicators. Doesn't necessarily have to be multiple indicators, but combine with indicators. You can use the volumes indicator. You can also use the RSI indicator. You can use moving averages. You can use a few indicators, or you can just choose perhaps one or two, right? So, for the purpose of confirmations. Okay. Now, some common mistakes to avoid include ignoring the bigger picture. Always zoom out to see the full market structure. All right, zoom out to see the full market structure. It is important. Okay, and do not chase breakouts. Wait for confirmation instead of jumping in too early. All right, and finally, do not ignore key levels. Always mark your support and resistance zones before entering a trade. Okay, and that is a wrap. Now you know how to identify, analyze, and trade market structure like a pro. Okay, if you found this video helpful, smash that like button and let me know in the comments which strategy you'll use in your trading. Subscribe to the channel for more expert trading strategies, and don't forget to hit that notification bell so you never miss an update. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.